So this looks super concerning on the surface, but let's point out two other situations that I think maybe help explain what's going on.
Most people are not paying cash for a vehicle. They're financing their car. And so the monthly payment is what is important to most people. And with rising interest rates, that has become a significant issue. Hey all, wrapping up this week of earnings with just a couple quick updates on Air Test Systems, TSM, Taiwan Semiconductor Manufacturing, and then Lam Research and Tesla earnings. So, Nick, let's just kick it off with a couple quick updates from us about Air Test Systems for starters.
Yep, this is going to be really fast because I'm not going to get to my rant this week on infinitely scalable, what that means, and whether software stocks are truly infinitely scalable.
I told him that I didn't have time to edit his rant.
So. Next week. We'll get to it next week. Okay. Air Test Systems. This is a different rant, Casey, but it'll be brief. We say what we do, and we do what we say. So if you missed our last update on Air Test Systems, we thought that the stock was headed far lower, but we thought $35 and lower was closer to fair value. So on Wednesday, we started buying again at under $33 a share. So there's our update on Air. If you want to know why it's doing what it's doing and why we're doing what we're doing with it, check out our last video.
Okay, perfect. And then as far as Taiwan Semiconductor Manufacturing goes, we did do an update recently when they released their monthly sales, but they, of course, had their full quarterly update just yesterday. So, Nick, is there anything that we didn't expect with this?
No, I think it was pretty much in line. And so in keeping with our video title that we lured you in here with, TSM is on our watch list for the end of 2023, but we're unsure if this one is going to get a really, really significant rally. Casey, maybe hit us with the high-level numbers from the quarter.
Net revenue, $17.3 billion US. Gross margin was at 54%. Operating margin, 41, nearly 42%. Earnings per share in new Taiwanese dollars was 8.14, which was down nearly 25% year over year.
Yeah, about what we expected. We said mid-teens percentage revenue decrease in US dollars was what the expectation was after that September sales report. That's exactly what happened. Revenue was down almost 15%. And of course, as manufacturing activity decreases, you lose some efficiency. And so thus the 25% earnings per share decline, as you said, Casey. We just did an update on this last week. So there wasn't a lot to this report as far as we are concerned in updating our assumptions for TSMC, but a couple of things we thought were worth pointing out anyways from the earnings call, Casey. The first on expansion of that fab in Arizona, out North Phoenix, off of I-17. I know there's a lot of concern about this. Is TSMC going to be able to be successful outside of Taiwan? And this was, of course, addressed on the earnings call.
CEO C.C. Wei said that they are leveraging fundamental competitive advantage of manufacturing technology leadership, large volume, economies of scale to continuously drive costs down. By taking such actions, TSMC will have the ability to absorb the higher cost of overseas fabs and still deliver the long-term gross margin of 53% and higher and sustainable ROE of greater than 25%.
Casey, this is great news. So as you just mentioned in the Q3 high-level numbers, you can see from those that even in a sizable downturn, TSMC is still able to deliver very, very high gross and, more importantly, operating profit margins. And as far as they're concerned, their plans for that fab in Arizona do not change their ability to do this. Now, this is significant to keep an eye on, though, Casey, because as we've mentioned over the course of the last year with this slide that you made, Taiwan Semi's international production is going to ramp up over the course of the next 4 to 5 years. Basically, very little advanced chip manufacturing happens outside of their Taiwan fabs, but that is going to go to upwards of 20%, perhaps even more advanced chip manufacturing outside of Taiwan. For example, in the US, also some plans for places like Europe and Japan. It'll be an important metric to watch this. As TSMC expands outside of Taiwan, will they be able to, in fact, maintain that gross profit margin profile of over 53%? Important to keep an eye on that. So far, so good, though.
As we have discussed many times before, we are definitely reaching the bottom in the semiconductor industry at this point in time. And the question has been, will AI offset that cyclicality of the business? There was an interesting point made by management at the TSMC earnings call. They said, while AI-related demand continues to be strong, it is not enough to offset the overall cyclicality of our business. We expect our business in the fourth quarter to be supported by the continued strong ramp of our 3-nanometer technology, partially offset by customers' continued inventory adjustment.
Okay, so translation here, we have another chart that we've been showing. Of course, 3-nanometer, currently the most advanced chip manufacturing node at TSMC. That is ramping up. The new iPhone 15s feature that 3-nanometer chip. The 3NMB, the N3B node, N3E is coming next year for more devices, and of course, outside of just the Apple ecosystem as well, offset by 5 and 7 and lower chip manufacturing processes. No news here again, really. I think it's just smartphone and PC, primarily consumer electronics, data center chips outside of the generative AI systems that NVIDIA is gobbling up right now, declining, but the bottom, it seems, is in. And so starting late in the fourth quarter, perhaps November, December, or maybe even January, it looks like this blue line will start to tick up and begin to work alongside the red line, 3 nanometers, the most advanced chips, in propelling TSM higher.
Also pointed out by management, they're coming out of that high inventory, low demand situation and finally developing more normal inventory levels.
And perhaps we'll get some more insight into this later on in earnings season when we hear from companies like Qualcomm, and we'll see what they predict headed into calendar year 2024. But it sounds like the industry, the semiconductor industry slump, is starting to come to an end, which is a good segue for Lam Research. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this.
Here we have September quarter highlights, nearly $3.5 billion in revenue, earnings per share on an adjusted basis, $6.85. Both of these numbers on the high end of their guidance for the quarter.
Yeah, in case you can see here, we're of course still lapping peak semiconductor industry sales this time last year. So big year-over-year declines, but nice sequential improvement for Lam Research as expected. So a few $100 million in sales increase from the June quarter and a nice nearly 20% bump in earnings per share on an adjusted basis as well. But there was, I think, one message Lam Research management really wanted everyone to come away with right now. And that was,
this is the worst in many years for sales in the semiconductor industry.
yeah, perhaps the worst ever, maybe worse than the dot-com bubble. I think maybe I would argue this is worse because semiconductors are far more important to the economy than they were over 20 years ago. So yeah, it's been rough. And Lam Research has actually done a fantastic job through this downturn. As you can see, of course, the huge year-over-year decreases, but this is still a highly profitable business, even in a deep downturn. As you all know, we're big fans of semiconductor manufacturing equipment, and Lam Research is one that we recently nibbled on. Casey, is this thing going to take flight here in the last final months of 2023?
I really, really hope so.
Let's delve into this a little bit more because there are some things that came up that are worth noting that could keep a cap on Lam's upside as we exit 2023. So this first slide is the revenue pie charts from the September quarter last year in 2022. So just quick background here, Lam Research's equipment is highly reliant on memory chips. You can see this time last year, 52% of sales to memory chip makers, especially NAND, memory, non-volatile memory, that's the NVM, and DRAM memory at 13%. And then also calling this out as well, China at 30% of revenue this time last year. Casey, that changed a bit this year, right?
Yes, memory dropped down all the way to 38% of their revenue segment. Foundry and logic took over more of the mix. But the caveat with that is now 48% of the revenue is from China.
Okay, so this looks super concerning on the surface, but let's point out two other situations that I think maybe help explain what's going on with Lam. So, of course, Lam, highly reliant on memory. It has been absolute destruction in the memory market. If you've been following along with Micron like we have, it's been quite ugly. They are deep in the red. And so when you're losing money, you don't want to be spending a ton of money on equipment. So they've been paring back on purchases from Lam. And unlike Applied Materials, Lam Research has this high reliance on memory. They were not able to fully make the transition over to ICAPS or IoT, communications, automotive, power, and sensors. In other words, more mature chip manufacturing outside of the most advanced manufacturing. They were able to partially make this pivot to logic and foundry, but not completely like Applied Materials. So Lam really taking it on the chin. So that's one comparison there to help explain the chart on the left. And then maybe on the right, Casey, this chart also looks pretty similar to ASML's geographic revenue breakdown, right?
Yes, absolutely. As far as the region mix goes, 48% of it, the revenue is coming from China. So should we be concerned as far as the export controls that have been increasing?
It sounds like it's a similar situation to ASML. It could have a bit of effect on the fab partners in China. That being said, Casey, there's all of this news hype around restrictions on AI chips. But actually, the vast majority of these fabs in China are actually just targeting more mature chip manufacturing in support of China's domestic automotive market. There are automakers there, industrial chips to help with things like manufacturing automation. So it sounds like Lam, like ASML, not completely sure what is going to happen to its China business next year. As management said multiple times on the call, China in 2024 could be up, down, or sideways. They don't know yet. However, they do have a high level of visibility into those customers' long-term needs, and the demand for more mature chips in China is on the rise, just like it is everywhere else. So they seem to have a high level of confidence that this pie chart on the right will normalize, but not decimate Lam Research's revenue again in 2024.
Lam did upgrade their wafer fab equipment calendar year 2023 range from 70 billion to the 80 billion range based on updated checks on non-Lam related markets and restricted fab spending in China. They expect there will be no impact to the Lam revenue assumptions at this point. All of this to say that it does indicate that we have reached the bottom of this downturn in the semiconductor market. We'll throw up this slide that Lam provided regarding their December 2023 quarter guidance. You can see sequential increase to $3.7 billion in revenue and adjusted earnings per share of $7.
This is great news. They did not want to give any guidance for 2024 just yet, but things are definitely moving in the right direction. Casey, I think, the stock is down today after earnings, but this is one that we continue to be interested in betting on for the recovery of the memory market, more so than our previous top pick, Micron. Micron has actually done quite well this year in spite of the absolutely horrific numbers that they've been putting up. But there are some things that I think we should keep in mind here. One final slide from Lam. As they move into 2024, it sounds like we can maybe expect some continued sequential growth from one quarter to the next. But they are going to be increasing their research and development. There are a lot of things coming down the pike in the chip market to support next-gen computing systems, everything from AI to electrification of vehicles and everything in between. So some of the underlying technology driving these things are like 3D memory architecture. Casey, I think we did a video on Lam a couple months ago talking about Lam's leadership in this part of the memory market, those through silicon vias or TSVs that you think of like it's almost, they're not drilled through the different layers of a NAND chip, but 3D stacking, basically, a type of a 3D architecture for the memory market. Lam's a leader here, and they are going to continue trying to extend their lead in this market. Management also talked about some of their other opportunities outside of memory, like in logic chips. So you may hear a lot about backside power delivery to logic chips. So as the real estate on a chipboard with all of these different chips and increasingly chiplet architecture, all these different pieces of silicon getting crammed into a tiny space, companies are running out of room to put more things in there. And so backside power delivery is a way to extend the shrinking down of computing systems. And they're very much a player here. Other things like gate all around architecture also on the way. So Lam plays in all of these markets. They are going to be increasing their R&D in 2024. And that is probably going to put a cap on some of their profit margin rebound and future expansion. I think that's something to keep an eye on. But Casey, I think this is a good bet on the memory market making a robust recovery in 2024 and beyond.
We think that Lam Research is a moderate buy and perhaps, as Nick mentioned, a better bet on the memory chip market than Micron, given that it's profitable, they're repurchasing stock, and it pays a 1.3% a year dividend yield.
Okay, our last update here, Tesla earnings, another stock that is down after earnings, but this one's confounding because the bulls always swoop in and drive this stock higher. So is this one that's going to run higher through the end of the year? Maybe. This is a small position for us, but I don't know. Casey, why don't you give us an update from your favorite CEO?
Oh, we'll just go through some of the numbers here. They posted a revenue of $23.35 billion in Q3, which is up 9% year over year. That's slightly below what was expected for them. They posted GAAP operating income $1.8 billion, GAAP net income of $1.9 billion. So that operating margin was 7.6%, down from 11.4% in Q3. And the big story here is Tesla delivered 435,058 vehicles, which is up 34% year over year. It was a record quarter for deliveries, but the profitability per vehicle was definitely down.
Yeah, quite a bit. This is because of the price war that is, I think we're in the midst of it now, as a lot of other legacy automakers ramp up production and try to capitalize on this market that Tesla helped pioneer in the first place. So you have a couple of notes pulled out from the earnings call, Casey, on some of the challenges Tesla is working through.
The deliveries of the Cybertruck will begin in November, and Elon Musk was very open about this not being a profitable endeavor right away. He said the challenge is making that Cybertruck affordable so that people can actually buy it. One quote that I thought was very telling, he says, "The more uncharted the territory, the more unpredictable the outcome." So they just don't know exactly how long this is going to take before it becomes profitable. He said maybe 1 year to 18 months before it becomes a significant cash flow contributor. At this point, over 1 million people have reserved the Cybertruck. So possibly by 2025, maybe 250,000 of them will be out there. That could become a profitable source of income. And the other thing that I thought was very accurate was he was talking about how really ultimately, when it comes down to the cost of a car, it's the monthly price, right? Most people are not paying cash for a vehicle. They're financing their car. And so the monthly payment is what is important to most people. And with rising interest rates, that has become a significant issue. And that is one of the reasons why they've had to decrease the cost of the cars because of that rising interest rate. People just can't afford the car. So if they can't afford the car, they don't go buy a Tesla, and we don't have this record number of deliveries.
Yeah, these are important points, Casey, on the affordability. Obviously, this is a similar dynamic going on with the housing market. We posted our article earlier this week on Airbnb and the housing market, some data from it that's having an effect. Definitely something to watch. I think the good news here, though, and we discussed this 3 months ago when we talked about Tesla, Tesla has an unrivaled ability to compete and win this price war because of their high profit margins, because of their very healthy balance sheet. Legacy automakers just don't have that same luxury. And of course, auto workers union strike doesn't help with that. One other thing I think is you pointed out, though, Casey, that is also having an effect on Tesla's profit margins right now that doesn't get as much attention is some of these factories, the one in Texas and with the Cybertruck, as you mentioned, especially, this is not just a price per vehicle problem that's dragging down the profit margins. When you have a brand new factory that is not yet at full capacity, that absolutely obliterates your profit margin. We already talked about this with Taiwan Semiconductor manufacturing and with Lam Research. It's really, at the end of the day, from a financial perspective, no different for Tesla. When you build a new factory, it's always a drag on your profit margin. So this is not just a price war issue, just something I think that's worth pointing out.
Yeah, I 100% agree. The company is still on track to produce 1.8 million vehicles in 2023. And eventually, those new factories in Berlin and Texas will be at full capacity. They won't have the same downtime that they did have in this last quarter.
Okay, Casey. So, especially with a company like Tesla, everyone's here just wanting to know, are we buying or are we selling? We do have a small position in Tesla, which is stupid because I've been a Tesla fan since before it was even public. Anyways, small position. Casey, what are we doing?
Well, with Tesla stock being down over 9% just in the last day after earnings, we haven't purchased in a while. And I know we're really cautious on this one. And Elon Musk is not my favorite CEO, but I do like the financials and the prospect for this company. So I don't know. What do you think?
Yeah, Casey, like mentioned at the outset, this is a confounding stock if you're trying to do some sort of fair value estimate on it, but it's a story stock. Elon Musk might be controversial, but when you strip away some of the controversy, when you strip away some of the hype, this is a company that executes very well with its manufacturing of vehicles. Some of its future prospects, the robotaxi, the AI bets, computing bets, maybe the personal AI robot that we still don't have making us a cup of coffee as we wrap up this video. Who knows if those work out or not? But at the end of the day, if you just look at the manufacturing of these vehicles, which we are a fan of, Tesla is a pretty cool car. It's changed the whole face of the industry, and we have firsthand experience with that. This is a pretty great company that executes well.
Maybe it'll be in our stocks to buy in November. We'll keep you updated.
If we do, it's going to be a small nibble.
Okay, that's a wrap for this week. We will have much more next week for you, so make sure you hit the subscribe button. Don't miss a video, and this earnings train will just continue rolling on. So will Chip Stock Roadshow.